Wall Street. Is Wall Street going bankless? What do they know about crypto, Ethereum, DeFi, Bitcoin? We brought an expert on to tell us, David Grinder, who is Gritter, excuse me, who is from Fundstrat, to tell us all of the details around this. If this is your first State of the Nation, we do these every Tuesday. We live stream them on YouTube, and then you can catch it on the podcast. David, I'm really excited about this topic. How are you doing today, man?
Sorry, Ryan, I lost my audio. Dude, this is such an important conversation because at the end of the day, all legitimate assets end up on Wall Street. And this is the progress that we are seeing Bitcoin run through. This is the progress that we are seeing Ethereum run through. And at the end of the day, like, if we want this to be the worldwide asset class that we think it deserves to be, it's the logical conclusion is that it ends up on Wall Street, because that's the center of capital of the whole entire world. And so this is a fun story to follow, and I'm excited to ask David about how this is going to work out.
Yeah, they've come a lot farther than they were over the last 10 years or so, but it still feels like they are in the early innings of understanding this, and David is definitely key in helping them, educate them. Before we get to that, David, we've got to talk about what's new. Right before we started this episode, something huge just dropped in Ethereum, in DeFi writ large. That is the Uniswap V3 launch. This has been much anticipated by all of us. So what are we doing, David?
We're going to do a walkthrough of Uniswap V3 with the details that we have. The blog post is pretty extensive, and there's a lot of interpretation and guesswork that I think is going to be left for the readers of that blog post. So we're going to go through that with the Bankless community to figure out what actually is Uniswap V3. So that is going to go live at 1 p.m. Pacific, 4 p.m. Eastern time. So join us back on the YouTube as we learn what the hell Uniswap V3 is.
Guys, I think that's going to be an alpha leak. And of course, we will DM Hayden Adams. You never know. Maybe we'll send him the Zoom link. He might show up. You never know, to explain some of this. But if not, we will proceed without him, because this is definitely a major launch event for the DeFi ecosystem, and we need to figure out what it means for us. Also, David, we dropped an epic episode on Monday on Ether, the asset, and Ethereum, the economy, with Justin Drake. That was a fantastic episode. Ultrasound Money. It is Ultrasound Money week as well. Tell us about that episode and why it's Ultrasound Money week.
Yeah, so this is, I think, going to be, over the long term, can ultimately connected to Wall Street. And the reason why Ultrasound Money meme is so powerful is because it's the Ultrasound Money meme stuck before the podcast was even released, which I think is awesome. That's how you know a meme is going to work. And what memes are ways for interpretation and just learning about something in a very small bite-sized package. And so, Bitcoin has really been spearheading this like sound money narrative in the times of money printer go burr. But Justin Drake came onto the podcast and talked about like, well, what happens instead of just replicating like what he called Stone Age economics, which is like replicating gold 2.0? What happens if we do sci-fi economics? What happens if we maximize and optimize both the cryptography and the economics side of crypto economics? And what that product is ultrasound money in Ether, the asset. At least that's what the long-term vision is. And so I'm excited for that podcast to go out and start with the Bankless podcast. And as we have seen with other previous content, I expect that to eventually make its ways to the ears of Wall Street, right? And see like, well, because there's always this cognitive dissonance of people, professional investors investing in Bitcoin, which is like, is that really what the cryptocurrency world has to offer? Is that really the best thing that is going to come out of crypto is Bitcoin? And that podcast suggests that perhaps not. Perhaps there's something more that the world of crypto economics has to offer. Perhaps that thing is ultrasound money.
Absolutely. I don't think the world has heard the case for why Ether is sound money. They've heard the case for why Ethereum. They've maybe heard tidbits of the case for why DeFi, but they have not heard the case for why ETH, the asset, they think of it as something else. So hopefully, we at Bankless operate at kind of that narrative layer. So we get it direct from the researchers. We sort of parse this into an understanding of the economics and of the asset itself. And then ultimately the hope is that kind of filters up to the higher levels and makes its way to a global understanding of what these systems are and what this asset is. David, before we get into our episode with David on Wall Street, let's talk about the state of the nation. I'm going to ask you the question I always do, which is, what is the state of the nation today?
The state of the nation is maturing. We are maturing, especially on the day where Uniswap v3 comes out, which I think is going to be the last, perhaps, version of Uniswap. So Uniswap is coming out in this maximally mature form. Ether, the asset, is both getting EIP 1559 and proof of stake expedited at a faster rate. And meanwhile, how we understand and explain these things is also getting better and improving. So overall, we are maturing as an ecosystem. And I think this is going to be the main through line that we have are about to have with our conversation with David from Fundstrat, is that, again, Wall Street only pays attention to mature assets, and Wall Street is paying attention. Therefore, we are maturing as an industry and as an asset class.
Absolutely. Well said. All right. We are going to get to our episode on Wall Street and crypto with David Grider. He is digital asset strategy at Fundstrat. But before we do, we want to thank the sponsors who made this episode possible.
GEMINI is the world's most trusted cryptocurrency exchange. I've been a customer of GEMINI since I first got into crypto in 2017, and it's been my main exchange of choice to make my crypto buys and sells. GEMINI is available in all 50 states and in over 50 countries worldwide, and on GEMINI there are markets for over 30 various different crypto assets, including many of the hot DeFi tokens, and it's one of the few exchanges that has liquid DAI markets. GEMINI just launched their Earn program, where you can earn up to 7.4% interest on 26 various crypto assets. If you're tired of paying fees in DeFi, or you don't want to worry about DeFi exploits, but you still want to earn interest on your crypto assets, GEMINI Earn is the product for you. Another product I'm stoked to get my hands on is the GEMINI Crypto Back Credit Card, which gives you 3% cash back on all of your purchases, but paid to you in your preferred crypto asset. When I get my GEMINI credit card, I'm going to make sure that I get my cash back in ETH. So whenever I buy something, I get a little bit of ETH bonus back to me at the same time. You can open up a free account in under 3 minutes at gemini.com/gobankless. And if you trade more than $100 within the first 30 days after signup, you'll be gifted a free $15 Bitcoin bonus. Check them out at gemini.com/gobankless. AAVE is a borrowing and lending protocol on Ethereum, and just recently released AAVE version 2, which has a ton of cool new features that makes using AAVE even more powerful. With AAVE, you can leverage the full power of DeFi, money Legos, yield, and composability all in one application. On AAVE, there are a ton of assets that you can deposit in order to gain yield, and all of those same assets can also be borrowed from the protocol if you have deposited collateral. Here you can see me getting a 200 USDC loan against my portfolio of a number of different DeFi tokens and ETH. I'll choose a variable interest rate because it's a lower rate than the stable interest rate option, but I could choose the stable interest rate option if I wanted to lock that interest rate in permanently. One of AAVE's V2 features is the ability to swap collateral without having to withdraw your assets, trade them on Uniswap, and then deposit them back into AAVE. AAVE does all of this for you all in one seamless transaction, so you don't have to repay loans in order to change the collateral you have backing them. Check out the power of AAVE at aave.com. That's AAVE.com.
All right, guys, welcome back. We have David Grider. He is digital asset strategy, a researcher at Fundstrat. Fundstrat, if you've not heard of this firm, they are an independent research boutique. So they advise high net worth individuals, wealth advisors, people in traditional finance. He does a great job educating what we crypto natives might call finance natives. You've probably seen Tom Lee from Fundstrat. He's a managing partner on CNBC. This is really our bridge to Wall Street. And David, it's great to have you on Bankless. How are you doing today?
I'm great. Thanks a lot for having me.
Well, before we begin, we should just echo, of course, like all Bankless shows, none of this is financial advice. Do your own research, of course. But we are here to talk about crypto. We're here to talk about DeFi. We're here to talk about Ethereum and Wall Street, particularly what Wall Street understands about it. And we're thinking about this conversation, David, in two parts. The first part is really, what does Wall Street make of crypto writ large, the asset class? And then secondly, I think we want to zone in on what Wall Street actually thinks of Ether, the asset. And you've written some great reports on both of those subjects, so I know you'll be able to cover it extensively. But let's start with that basic question at the 20,000-foot view. What does Wall Street make of crypto? Like, what do they think of crypto right now? It felt like in 2016, crypto was this weird sort of scam, crypto anarchists, a very small niche community. But that's all changed this cycle. I get the impression. Where are we today?
Yeah, I think really starting, towards the end of last year and into this year, I think it's come on the majority of Wall Street's radar as, okay, this thing is real. We need to figure it out. And, that $1 trillion asset class kind of revisiting that moment was really a tipping point for crypto, because it became so large that, if you compare it to, other sub-asset classes like, different bond segments and different areas of the credit or emerging markets, right? Like it's a very large segment, and it's in terms of investment assets, it's kind of flown under Wall Street radar, and they couldn't ignore it anymore. Before that, I would say largely ignored, which is why I think the question is what does Wall Street think about crypto? It's very dependent on different pockets, right? There's people who have been following it, who have been early. I talk to some PMs who are traditional portfolio managers, very wealthy fund managers, right? They have their family money. They've been following crypto, investing in it, and their money for some time, and they're up on it. But it's everything across the range of the spectrum to, other funds who, they're just mutual funds. They don't get it. They haven't got it, but now it's time, and they're trying to figure it out. And I think it's, what do they think of crypto? Some of it they don't know yet, and it's this thing is Bitcoin. Okay, this thing is kind of real. We got to get a handle on it. What are the rest of these things, and how's that going to fit into our portfolio?
David, I want to ask about career risk with crypto, because this has been something, at least from the inside of the crypto world, is something that we've all been paying attention to, because if there's less and less career risk for investing in crypto, that means this is just more legitimate. This is capital will flow easier. And I think back in 2017, 2018, 2019, perhaps up until 2020, perhaps that career risk element was still very, very strong. Maybe you could kind of give us the timeline over the last 3 years as the conversation of career risk and investing in crypto has matured and developed.
Yeah, I think the thing to remember is Wall Street. I heard this once early in my career. Going to Wall Street and being an investor is like one of the best jobs you can get. You get paid a lot of money. You don't have to do too much but outperform the market by a few percent. And all you have to do is really just don't blow it up, and don't take too much risk, and right. So if we think back to the 2017 wave, and everyone's like, the herd is coming, the institutions, and they kind of never came at that time. And I think one of the reasons was the money that was coming in at the time was it was a trickle down effect from Wall Street, but I think it's the private money from Wall Street, right? It wasn't the actual managed assets and managed fund assets from Wall Street. And it's like also the personal money of people, because you don't have career risk if you're putting your money in it and you see the upside in the investing in the crypto economy. But if you try to put your clients' money in it, and plus there's fund mandates and things that are constrained from it, and it's new, all the custody things, that stuff was just unheard of and impossible back then. But we think we've slowly seen, of course, some of the endowments come in over the years, right, from 2018 and 19. I think on the liquid public market side, if I think about career risk for some hedge fund managers, right, and setting aside the kind of crypto fund, crypto native group, the traditional sense of folks, you can see those people play the futures and play the options and speculate maybe on the price, when the CME came out. But when you saw Paul Tudor and you saw some of these, Stan Druckenmiller in 2020, kind of on the hedge fund side, be willing to actually, place kind of macro bets on the longevity of, or at least on the trade of owning Bitcoin for that time and that period. I think that opened up for a lot of fund managers who really have been following those guys for years, right? This is a time we can kind of start to look at this thing, or at least it's not going to be such a career risk moment. And I think now that the banks have kind of gotten on board too, right? I think that's starting to change in a number of different ways across not just the hedge fund spectrum, right? Because there's a lot of different places to invest capital, right? There's also the RIAs and the wealth managers, right? So, now you see also that group with like Morgan Stanley getting a platform, getting a place to put capital to work, right, in the crypto ecosystem through what was just announced there. That's something now that's kind of reducing the career risk to investing in crypto and making it more accessible.
So I think the macro narrative here that you guys are painting to Wall Street really comes across in the report that you just wrote in the beginning of this year. And I'm going to show an image from that report. Maybe we could walk through some of it, because this to me feels like the lens, almost like the narrative lens that you guys are painting for the rest of Wall Street. And as I said, I see Fundstrat as really a bridge between digital assets and crypto and this new economy that's emerging and Wall Street. Like, we do a good job. I like to think Bankless does a good job trying to explain this to crypto natives. But what you guys do, David, is a great job explaining this entire asset class and movement to traditional Wall Street folks. So we want to go through maybe the lens through which you explain it. And I love this image on the report that you put out in 2021. And it's this image of like a family. I don't know. This looks to me like it's circa 1993, 1994. They have like a Windows PC of some sort, and it's a family like sitting around a computer saying, "Surf's up, see you on the net," right? And this is like, the beginning of cyberspace, the beginning of the internet, before we all knew it, before we all used it every day, and it was sort of this niche thing. Let's talk about that comparison first, because the report is titled 2021 Outlook. What's the outlook for crypto? It's going mainstream. Is Wall Street picking up on this comparison to the early internet, the 1993, 1994 internet, and seeing crypto?
Yeah, no, I think it absolutely is. I mean, our focus is, like you said, like there's a lot of folks who are very deep into crypto, and we try to be very deep ourselves. But what we also want to do is kind of be the bridge, right, where we can help, our traditional investors think about how crypto's merging with the real world. And when it was so small and when it was just emerging and the use cases were, more limited than they are today, it hadn't really kind of merged with the global and traditional economy. And we're seeing that really happen now, right? As similar to any of the, emerging of any technology, right? Just like when the internet came, where it's going to disrupt, just like the internet disrupted many traditional business models, right? So our focus really with a lot of our research is helping investors also think about, right, you own, these types of companies in your portfolio, right? Here's what crypto's coming up, and here's what crypto's doing across all of these sectors. Just like the internet came up and disrupted some media, disrupted broadcasting, disrupted, the way we all communicate online, created social media, right? And here's how that world is merging with our current world, and it touches every part of almost the traditional economy. So, when I think about when we're trying to convey the idea to people of crypto, this novel foreign thing, we really have to kind of help them come back to the period of when a new technology emerged like the internet, and how foreign it was then to get on dial-up, to get on these these websites. You don't know who you're talking to in the chat rooms, but what it emerged to, and what the technology really brought us, right? And that's the same thing we want people to recognize is really happening here.
How does that metaphor land? Does that make sense for people, or do they still kind of need some convincing after the internet metaphor?
No, I think the internet metaphor really does work for people, because they have enough experience to be able to think back to the .com days, right, and to kind of the early kind of getting online days. I mean, even I can remember, I'm a millennial, kind of mid millennial, and I can remember. Really kind of getting online the first time, and some of the companies and stuff that were coming out doing interesting things. So I think people get that now, and I think that it's still like it's like the internet, right? When it's early, but no one there's so much new stuff happening, so innovation, like you get it's going to be big, and you know it's going to change everything, but you don't exactly know how it works, right? And from even experts in the space across all of the things that are happening because there's so much innovation, but you know it's important, right? And and then I think there are some people who maybe have gotten even bad narratives from the crypto community that have just been fed to them for a while, right? And that I think that is possibly one of the reasons too that it's taken so long. Is there's just been some bad narratives.
What were some of the bad
crypto.
narratives, David?
Well, I think I think a lot of the illegal stuff, right? That was just a bad narrative, and it's still even you still hear Janet Yellen saying it. And
You're
I
talking
think
about like money laundering and stuff like this.
yeah, and then I think some of the other stuff around whether it be like I think Wall Street generally doesn't want to displace the dollar. I think that from their vantage point is it's very against their entrenched interests.
Well said. So they Wall Street did not like the whole crypto anarchists, like this is darknet money, like screw the central bank, screw the government sort of thing.
Yeah, I don't think that pulled weight for a while, right? And then, I think it's catching more now that there has just been such, with COVID, such a massive change in the monetary regime, right? So I think that was kind of a catalyst that kind of brought the digital gold and that narrative stronger, right? But I think there's still people who still think, even the currency narrative of crypto is all currencies, right? They're all just going to be currencies, and they're not. We all know that they're not, right? We all know that DeFi is not just, it's not currencies, right? We know Ethereum is really a cloud network. We know a lot of these things can look like, digital companies and other many digital assets, and I think the confusion around, thinking there's 1,000 currencies of everything, that happened for a while too, right? So, and then I mean, I still talk to, I was talking the other day to someone inside one of the very, very, very large macro funds, and they're kind of getting it on Bitcoin, right? But even still, they're like, I don't get why anything else. They hadn't even done the work on Ethereum. So I think but then it depends, right? Some folks are even down; they understand more. But that's to answer your question. So.
All right, cool. Well, let's lay out the case that you guys make, because I think you make it very well in your report. And the first goes back to something that you said in the intro when I asked you the questions, like, what does Wall Street make of crypto? It feels like part of your answer was they know it's not dead, and they know it somehow bounced back from 2017, 2018 to over $1 trillion. So they can't ignore it. Now, I think the first point that you guys make really well in your report is that Bitcoin has been the best performing asset 9 out of 11 of the past years, right? Like, so when you look at all of the different asset classes, here's a slide that we're showing: gold, various commodities, oil, stocks, S&P, bonds, treasuries, everything. Up at the top here, you see Bitcoin, and it has not just outperformed, but like massively outperformed every single asset class, almost every year. It had 2 bad years, which was like a negative 56% a year and a negative 74%. But its good years were real good. Positive 5,000% growth, 126% growth, over 1,000 growth in 2017. So can you talk about that? When Wall Street hears that and sees the data of like, hey, you can't, they don't like ignoring gains, right? So when you make the case and you say, hey, the last 11 years, if you want to see what the best performing asset class was, it's a cryptocurrency and it's called Bitcoin. What do they say, and how does that resonate? How does that land with them?
Well, I mean, I think back to, even one of the prior things we were just talking about, right? obviously everyone wants to make money, but then I think on the other side, even today, I still see like, a few months ago, I think it was, one very large bulge bracket bank who came out and said they were just showing the returns of Bitcoin, and they're saying, is it, the biggest bubble in history, right? And people see, the returns, and for some reason they think, high returns like this must mean it's a bubble, it's going to crash, because they're not used to that type of returns unless it's maybe Tesla or something, right? And we know the what that created on Wall Street in terms of the chaos, but and without in traditional markets. But I think what's happening here is it's not fitting in their existing paradigm box, or at least it wasn't for some time, and because of the disruptive innovation. So, I think now that people have seen the returns for so many years, and we're just at this size of scale of its, of the maturity of the asset class, I think people now understand that it's an investable segment for their portfolio.
Do you think that the people expect Bitcoin to not have those kind of same levels of returns because it is maturing as an asset, or do you think that people are hoping that at this point in time, like Bitcoin has been the best performing asset classes in the last 9 out of 11 years, and therefore they're hoping for, strong continuation over the next 5 years? Where do you think people's heads are with like the next 5 years of Bitcoin performance? Do you think it's are people expecting this to be equally as crazy, or do you think people are getting in now because they think that it's finally going to start to behave like something that they are more comfortable with?
Well, it's definitely becoming more integrated with the global traditional economy and traditional asset classes. I mean, we can see, that, when certain assets, perform in different ways, there's a lot of correlations now that we can see that the crypto's gotten so much bigger. But I think, you're seeing a lot of people getting in today because they do still expect a lot of upside from this asset class. And then you can have strong returns in crypto if the tech continues to disrupt. Again, we think crypto is like the next wave of the internet. Just like internet stocks, have risen to create the FANGs and all of the large tech, winners that have made a lot of people a lot of money on Wall Street for a long time. We think there's still a lot of upside in crypto. I don't know that the yearly returns, we can see that, cycle over cycle, Bitcoin returns, and this is just the kind of a law of large numbers thing, right? They are slowing down, but I think people are really getting in today because they do see more upside, and it's attractive to put in their portfolios at this point, right?
It also seems like, the case that this is like the third market cycle. This is the third time really this has happened, right? So you can kind of get them used to the rhythm of these 3-4 year cycles. These boom bust rhythms aren't just one-time events. This is part of the cyclical fractal nature of crypto. And I love this chart here, where you just show like it just says 2017 when we see crypto spiking up towards 1 trillion, didn't quite hit that. Is it a fad? Nope, because we just hit 1 trillion again, and this was in January of 2021 that you guys published this report. We are over 1 trillion now, decently over 1 trillion. So it just feels like it's the next reverberation of that cycle again. But I want to talk about this comparison you make, because this is a really interesting lens through which maybe Wall Street can see crypto, which is not just as a commodity asset, but as an economy. And in this slide, you compared the top largest nation state economies on earth. You've got the US, you've got China, you've got Japan, 1, 2, and 3. And then you compare that with crypto as an asset class. And crypto actually places as the 16th largest global public economy. Can you talk about that framing? Does that resonate with Wall Street?
Yeah, so that's a comparison of the stock market capitalization versus crypto. Actually, nowadays we're probably coming up on Canada, which is kind of interesting to think about. But I do think about crypto as really the next wave of the internet, in the sense that it gives the internet it makes the internet its own emerging market economy, right? You hear Coda's law with Ethereum and what that enables, and it kind of gives this self-sovereignty to the internet and gives you global internet communities, right? So in that sense, you've kind of created countries in the cloud, which is a narrative that I think is kind of developing. And I think what is happening is back to the boom bust cycles, right? And it was just a small economy, a small digital economy, very reflexive to capital flows before. People saw that as, just pure speculation. But what I think it is just like, as any small economy matures, right, it grows. And I think, crypto economy, I think it has the potential to be as big as the internet economy, and then potentially larger because of the innovation it can unleash over the long term. So I think that now that we're at that size, again, it's like you can't ignore it from an investability standpoint.
This is another slide that I think is hard to ignore, and some data points that are hard to ignore as you guys are painting the picture of this whole crypto thing being as large and on a similar growth trajectory as the early internet. So what we see here is the amount of crypto users over time, starting from about 2015 to 2020. And there's another chart on the amount of internet users over time. And that chart spans across the top from 1992 to 1997. And what you guys are reporting out here is there are close to, it says passing over 100 million worldwide users of crypto. These are all people who are not necessarily using DeFi in their everyday lives, but I would assume at least have a crypto asset, and that would count as usage of crypto. They're using crypto maybe to store their value. And the interesting thing here is it looks like it's a similar trajectory as the internet in terms of annualized growth, but maybe even faster by this comparison. So you're sort of charting that out. And I love that people always ask, well, if this is the early internet, what year is it? And this data point says it's the year 1997, basically, of the early internet. So like right before the .com boom and before this internet thing went mainstream, we're still in that sort of early speculative hype part of the cycle. Can you comment on this a little bit?
I mean, I think it really goes back to the cover page that we were talking about when, people were getting online, right? And everyone's kind of just trying it, right? Crypto's kind of hard to use. Not everyone uses it. It's not as intuitive, storing and keeping your custody and your security. But, just like getting online with dial-up and how effortlessly it is, nowadays, right? Because we're all so native with it. And we've all, billions of people, most of the world have kind of joined the internet revolution. I think this crypto internet revolution is really in the early innings. And I think, back to, the days of it, I mean, I really do think, we're seeing use cases emerge just like these early use cases that are really hitting society's kind of going mainstream moment, as we said in the cover, right? Whether it's things like DeFi or things like NFTs, I think we're kind of crossing that chasm where, the traditional mainstream society, it's not just these niche technologists, right? These people like us who have been following it for some time, right? But it's now kind of hitting, application level for everybody to use. So, and again, we have data that says that as the internet growth of users, right, the growth of the value tracks it as well.
This
Both
is
for
kind of
internet stocks, we think for crypto as well.
a Metcalfe's law sort of derivative.
Yeah, it's similar. I mean, yeah, it's similar to that.
David, I've got a question because we always, in crypto, we always use like the .com bubble, kind of like this frame of reference. And I remember back talking about in 2017 when I was first getting into crypto, saying like, oh yeah, this must be crypto's own like version of the .com bubble. But maybe that comparison back in 2017 didn't hold water. Maybe that was just my anchor point back then. My question to you is, do you think that this is going to turn into a speculative mania actually inside the stock market, as in the stock market is going to start playing the crypto game in the same way the stock market started playing the .com game back in 2001. We see Coinbase ready to go public. We've seen companies like GEMINI signal interest, and then we've seen a number of companies signal interest after that. And then there are plenty of already public companies putting Bitcoin on the balance sheet, and then those companies' share prices going up after that. And then there's public companies like PayPal putting BitGo or custody providers on with their acquisitions. Do you think that this could actually start to play with the valuations of stock market valuations, and that this kind of turn into its own kind of legacy market mania just because of how much excitement there could be in the crypto markets?
Well, I don't think that, look, the Fed said the other day they're not concerned about what's happening in the crypto markets for the broader economy and for the broader traditional markets. And I would agree with that because, back to the other chart that we showed with the size of the stock markets. I mean, the U.S. stock market is, I don't know, maybe it's 50 trillion, right? And we're, pushing on, 1.75, right? So that's much smaller. I mean, this is it's just a pocket of global investable assets. It's very small these days. Is crypto I think crypto in 2017 was not the .com moment because, if, as we just showed, right, that like was at $1 trillion, right, of market cap then. If we just think back to what the .com bubble peaked at, if you take the technology index, then it was 4.5 trillion market cap for the .com bubble back then, right? So if you even think about where we are today with crypto's growth, in terms of market size, we're still under that. And then if you think about broadly, like that was back in the 90s and 2000s. How much bigger has all of the investable asset class base become since then? So if a .com bubble is your frame of reference, right, and 4.5 trillion in 1998, right, 2000, right, and then you think about M2 growth, you think about all assets class growth, right? Like how much bigger, if there is a .com bubble, right? And I'm not betting, I don't want to bet and speculate on one, right? It's possible, but what would that size be, right? And at that point, then it does kind of become maybe some risk, but not today.
It's funny, David, how well that maps to like today is 1997, right? Because what this all means is we still have the speculative .com bubble essentially ahead of crypto, and 2017 wasn't it. Maybe this time around, maybe this cycle we'll see that. I'm wondering if you see this cycle kind of growing into not a stock market speculative like mania, but a .com sized event where the assets in crypto run up to the maybe the tens of trillions of dollars.
Well, we don't want to put our clients in things that we think are just going to kind of be betting on a speculative frenzy, right? So that's kind of not our core focus. But we do think, even still at today's levels, there's fundamental value, and we don't think the market's in a bubble by any means, right? So, is it really possible that the macro could happen and we could go to those levels? Absolutely. I think it's possible that those types of things could happen, right? So I definitely think crypto could see that, right? And I think, but what's important is making sure, kind of just like DeFi is, right, the usage and the application growth and the fundamentals track it, right, to make sure how sustainable that is.
Absolutely. Well, guys, we are going to be back with David in just a minute. We're going to talk about how crypto is disrupting banks. We're going to talk about how Wall Street sees ETH, the asset, and Ethereum, the network. But before we do, we want to tell you about the sponsors that made this episode possible.
If you are looking for a product that connects your fiat bank account with DeFi tokens and products, you need to download the DHARMA mobile app. DHARMA is a non-custodial smart contract wallet and comes with a bridge that connects you right into your bank account. DHARMA is the fastest and most efficient wallet between your fiat in your bank account and any token on Uniswap, or even any vault in Yearn. With DHARMA, you can get over $25,000 per week into the DeFi universe, and you can do it non-custodially. If you or anyone you know is hot on DeFi and you're trying to get your money into a DeFi investment, DHARMA is the place to go. Signing up and going through KYC is an absolute breeze. It took me just under 3 minutes, and after signing into my bank account via Plaid, I am now just one transaction away from any token that Uniswap has to offer. Go to www.dharma.io. That's DHARMA.io. Download the DHARMA app and get yourself unbanked today. If you want to live a bankless life, you need to get a Monolith DeFi Visa card. Monolith is both a 1-2 punch of an Ethereum smart contract wallet, as well as an accompanying Visa card that lets you spend the money that you have in your Ethereum wallet wherever Visa is accepted. It's really a fantastic tool that lets you use Ethereum for what it does best, which is holding and managing your financial assets, but also keeps you connected to the rest of the world's payment rails. Monolith also offers ONRAMP services for getting your fiat money into the world of DeFi. So it's trivial to top up your Monolith card if ever you need to, and your deposited money goes straight into your non-custodial wallet. So your money is never held by a centralized intermediary because your Monolith wallet is native to Ethereum. Monolith helps you transcend both the legacy and the crypto worlds because the money that you hold in your Monolith wallet has the power of DeFi behind it. Swapping assets on Uniswap or earning yield in DeFi is at your fingertips. But with Monolith, so are the groceries at your grocery store or the coffee at your coffee shop. Go to monolith.xyz to sign up and get your Monolith Visa card today.
I mean, not exactly, but here we go. I'm
Hey guys, we are back with David, and we're talking about what Wall Street makes of this whole crypto thing, this whole crypto revolution. And I actually want to get to this part of the conversation.
over many things in its own way. So I think actually when you think about DeFi and the applications that are being invented there, I think they find that more possibly threatening to their business models or innovative in some ways, I think, than even some of the things like Bitcoin. To some people, they kind of get it, right? And I think that, from a fintech perspective, I mean, I've even seen, I'll just say I see a lot of sell side reports that come out, and some of these things have been made public, right? With just a couple of bullet points from two. I've even seen Bank of America, who's been pretty critical on Bitcoin and crypto in a recent report, be like, DeFi has a lot of innovation potential. And then,
Wow.
Yeah, and they were kind of, giving some not so good takes on Bitcoin, right? And I think that the same thing is being said kind of across, some of the other, kind of Wall Street firms. So I think the view on DeFi is actually more bullish and positive than on Bitcoin.
This is crazy to me, David, because actually what you're saying here was echoed by a guest we had from Bitwise, Matt Hogan.
Not the first time we've had this take. Yeah.
Not the first time we've had this take, and it's a kind of
know Matt well.
So okay, so Matt basically he made the point that a lot of people who didn't understand Bitcoin, they get DeFi right away. First because we're talking about capital assets, but second, and maybe like, from a larger perspective, they know that the current existing financial system and banking system sucks. Like, they know it has rent-seeking behavior and needs to be fundamentally disrupted. And they know that fintech just kind of scratched the surface on the level of disruption that's needed. And this goes to one of the slides you kind of put together about this evolution of banking, where we had this kind of banking 1.0 and fintech was sort of a 2.0. But DeFi is kind of a ground up. We're replacing the entire infrastructure from the ground up revolution that hasn't happened yet. And Matt said that people in finance, CPAs, CFAs, inherently understand this and even understand it better than the narrative of Bitcoin becoming a new global money, right? That's like, they dismiss that as Bitcoin gold bug stuff, but this, they gravitate to. Is that what you're saying?
That's exactly what I'm saying. I think they see the kind of disruption potential. And, I think with this, right, like, if you think about back to what we were saying with trust-based systems, right, what was the point of having a bank? You had to walk into the bank. You had to know the person in the local banking region where you were going to get a loan. You said hello to them. You went to church together. They knew you were a credit-worthy person. The bank would give you a loan because you were borrowing it from the person down the street, right? You created a global network of this, and these payment rails and the tech has just not been as innovative as you have with the digital society and technology. And then you have fintech that's emerged. And, instead of walking to a bank, you can, authenticate through your phone. You can use, biometric authentication, right? You can use different things like SoFi, and they have all these other data points that you didn't have in banking, right? But so that changed the trust layer again, and that opened up access and increased access, lowered cost, right? But the thing that underlying it all, right, was this decentralized infrastructure layer of the trust-based systems, right? And with crypto, and these open blockchain networks and the DeFi applications, right? It's, I think, when you decentralize that aspect of the trust-based system, right, it creates a lot of, especially non-custodial, everything's on chain, the contracts, how liquidity works, right? It changes how the product can reach the market and expands, right, the user base. And I think there's a lot of disruption potential for that. I mean, there's a few guys writing lines of code, and you have protocols that are the size of mid-sized community banks right now. Some of these borrowing and lending platforms, right, in terms of assets.
Yeah, absolutely. They're getting large, and I mean, we've often echoed the story of Uniswap, which you talked about some big news today. But it's like a team of 15 people basically, and they grew to volumes that surpassed Coinbase in like less than 2 years, which is crazy. What I love about these types of reports too, David, is you guys aren't afraid to make predictions. This is what's fun about Wall Street analyst reports. I think sometimes people in crypto are somewhat reticent to make predictions, but you guys are throwing out some numbers. These are some numbers you put together at the beginning of January, and I'd love for you to give them some context. But this is the 2021 outlook: Bitcoin to 100K, Ether to 10.5K. So we're hitting that ETH to 10K magic meme marker, and the crypto market writ large, 5 trillion. We're going to get some details maybe into how you're coming up with those numbers for Ether, the asset. But can you give us just the high level? Where are you coming up with these numbers? And this isn't the first time you've made price predictions on some of these assets. How do you go about even coming up with price predictions for these assets?
Yeah, it's a great question. Just so for context, because we're a little past that, right? This was back when, I think Bitcoin was around 35,000 at the time, and it just hit 40 and pulled back. And so, we've come a good ways towards that. Ethereum, I guess we all kind of know, you can probably triangulate where it was back at that time, and the crypto market cap was still back at $1 trillion. So we're on a good pace. But yeah, I mean, the way I've come about it, at least, is kind of fundamentally driven. There was for Bitcoin, I look at it kind of like, strangely in a way, digital real estate or its own commodity. I look at it as a book value multiple of kind of the total mining investment, because, you have to mine a lot to produce these things. And I came up with this model, I call it price to book for Bitcoin, kind of like you value a bank on a price to book multiple. And my book value was just the total mining investment. And this is something I came up with back in, January of 2018, right? And so that's how I look at that one, right? But I look at Ethereum in a different way, and we can talk about it in a second, because I think about it like a cloud computing stock network, in a way, a crypto network of a cloud stock. So I look at, now, of course, it's still mineable like Bitcoin today. I'm just looking at it on an ETH kind of 2 lens. And on the crypto market cap side, I think it does kind of come back to some of the cycle factors that we were talking about. I kind of think if we hit those 2 numbers, because that's, 80% of the market, the rest of the market kind of goes with it. And, I'm just thinking about kind of ratios, broadly alts tend to outperform just because of capital flows. And, thinking about what kind of dominances could be, right, at that point. But I do think about it kind of like as an economy level, right? So that's kind of how I got to that one as well.
So let's get to this kind of second part, this whole conversation around Ether and Ethereum and the understanding. It very much feels to me like we've said this before on Bankless, that Ether, in terms of its narrative understanding, is maybe a cycle behind Bitcoin. Like now Bitcoin
Absolutely.
is just adopted as Yeah, that's digital gold. Okay, we
Yep.
understand that. We get that narrative now, and they put it in the context of macro, which we haven't dug into, but obviously that's that is definitely a catalyst for crypto. But can I ask you this basic question? So it feels to me like a little bit the conversation is moving from just a conversation of when you say what is crypto, and somebody says what's Bitcoin, to now it's maybe not just Bitcoin, it's Bitcoin and Ether, like those two assets. Is the conversation moving in that direction, or is Ether still and Ethereum still not really rising to the level of being something that's named that people understand?
I think the best way for every user or every like kind of probably listener to your show to think about it is imagine that the mass bucket of capital that's been entering in the mass segment of investors and users are you when you first got into crypto. For me, that was back in 2015 with Bitcoin, and then Ethereum after the DAO hack, right? And think about what your learning curve was when it first came on your radar. You first decided you're eventually going to listen to it, look at it, and you had to try to understand it. Where you started and when you kind of got to within your investment spectrum, right? And I think for most people, it really is this process of, okay, Bitcoin's the biggest, it's the largest, it's the first one, it's the one most people talk about in the media, but that's changing, right? So if you figured that one out, right? And then we figure out the rest, and you kind of move down the spectrum, and you capital and flows and invest on the spectrum. So I think that same awareness, knowledge and learning, and then investment capital flow curve applies, right, to what's happening today, right, just at a bigger scale. And that's the thing to keep in mind. So the way I'm seeing it now, right, most talk was about Bitcoin for some time, right? Bitcoin's kind of now most people are starting to understand it and starting to get it. Most research reports and stuff on crypto that came out first were Bitcoin, and the products like Morgan Stanley and the ETFs, right, were Bitcoin, right, through those channels. But now I'm seeing stuff like I think AllianceBernstein, one of the software group there, put out a pretty good report on Ethereum, and also on some of the upgrades that have been happening. And I think that same exact learning cycle is going to happen, and is happening right now with Wall Street, right? And again, everyone's kind of following this educational curve. And I do think that there's a lot of crypto smart money in Ethereum, kind of like what's going on with the strong fundamentals in Ethereum, in terms of all the application usage, all the ecosystem growth, right? And then of course it outperformed last year Bitcoin, and this year, right, it's had strong returns as well. But we're kind of taking every cycle takes a breather and a pause, right, and kind of wondering what's next. But I think that that's part of it, right? It's just the learning capital flow dynamic, right? And I think that people are going to recognize the potential for disrupting, I think, in my view, big tech with cloud platforms on the blockchain computing side.
David, I want to ask about how this whole DeFi thing impacts people's learning process about specifically Ethereum. Because as we've said, there seems to be this resonance that more traditional investors have with the DeFi assets, mainly because they are capital assets, which fit into older models that they're familiar with. Yet I would imagine as they start to do this evaluation on some of the most common DeFi assets that are out there, such as Uniswap and its X number of $1 billion of volume, or AAVE and Compound and their X number of dollars of assets under management, all these things fit into their models. Yet I would imagine that the Uniswap is an application. What's that application built on? It's built on Ethereum. AAVE, Compound, it's also built on Ethereum. MakerDAO, also built on Ethereum. Basically, if we're talking DeFi, we're talking Ethereum. How does that fact that these DeFi things that they are learning about that fits into their legacy models, and they all happen to be built on this same platform, that's this Ethereum thing, how does that impact people's perceptions or trajectories about learning about Ethereum versus Bitcoin?
Well, I think it's the same as developers, right? I think if you're a developer and you see a lot of tools on one platform, right, you're going to probably you can get the API layers, and you can get all the things you need to get to, right? You're going to probably learn about that platform and learn how to build on it. And I think people recognize, right, that to this point the Ethereum economy is certainly the largest, in terms of applications, right? And I think that's one reason, reflected why it is the second largest in terms of, its market cap as well. So I think it definitely says a lot, right? There's a lot of product market fit with the DeFi applications in what I call the Ethereum cloud network, and, I mean, people, sometimes criticize the fees. I think that's, I saw something similar where someone said Bitcoin couldn't work because fees were too high and they were too volatile. And then I just thought, like, do you say that when you get a surge charge with Uber because you have demand pricing, or is that product market fit because you're willing to pay it? And that's the thing I think is interesting, right? So, yeah, I mean, I think showing that all these things are built on Ethereum, right? And things are being built on other platforms as well. And there's a lot of exciting stuff happening in crypto, right? We cover it all. But again, we are bullish on Ethereum too, amongst other things, right? And I think that definitely it's a sign to say, hey, this is a very good place to look for fundamental innovation happening that is kind of lasting through the cycles, in my view.
I want to get your sense, David, of Wall Street's level of understanding Ethereum and Ether, the asset, sort of the investment of Ethereum. So like there's the base level understanding, I think, where you think of ETH, the asset, as kind of a commodity to pay for gas in the network, right? And you can kind of value it based on what's the demand for this commodity going to be, this commodity money within the network. So that's like one level. There's another level that David and I have been talking about a lot, which is ETH as a store of value asset, right?
Super
and so
sound
that's
money.
the
Ultrasound money.
Ultrasound money, ultrasonic money. And so like that's kind of the similar case that of Bitcoin, which is Bitcoin is digital gold, while Ether is kind of digital gold for an entire economy, right? There's that case. But you're making a different case as well when you get to that 10K valuation, which I think is really interesting. You're making the case for ETH as a productive asset, ETH as a capital asset as well. And like both David and I would agree that like ETH is a triple point asset. It can be all of these things. When it's staked, it can also be a productive asset and provide returns. But here's the case that you're making. And once again, 2021, I think, is the first time that I've seen those bridges to Wall Street, which you guys are, an educational bridge to Wall Street, being able to make this case for Ether, the asset. And your case is based on the revenue that ETH, the asset, and the Ethereum network is generating. So I'm going to read some parts of your tweet, and then maybe we'd talk about this a bit. This is from March 9th. Ethereum has a market cap at that time of 210 billion. ETH generated 1.75 billion of revenue year to date for 2021. That's a 3x of its 600 million that it earned in 2020. At this pace, ETH 2021 revenue is set to grow 1,400%. If you annualize that, that means year to date revenue, top line revenue of 9 billion. The framing of this is so interesting because what you're arguing for is basically Ether to be viewed through the lens of a capital asset, and it's a capital asset that's going through an insane period of growth. And that's, I think, where you're getting to when you start talking about comparing it to cloud compute type platforms, right? Maybe you could walk us through the comparison, David, because I think it's super cool.
Yeah, so I'm kind of putting it through, kind of a post. You've implemented some of the changes to the protocol that are kind of coming up, right? Staking and kind of a burning implementation lens, right? Because, obviously it is still mineable today. But, when you are in finance, always you have to think about it, right, on a forward-looking basis, right? What is the future? What are the company, how can they do, right? So, the thing that, the reason that I don't think people were able to do this in the past and they can do it today is because the numbers just weren't there. Ethereum, at any scale on a layer 1 today, at least in terms of fees and revenue generated, it's Ethereum and Bitcoin at that level, right? And it's, if you think back to Wall Street is investing in more mature things, right? You're not investing in the small startup kind of early seed stuff, which the tech stuff can grow for a lot of these other crypto platforms. But you can look at it now on a traditional lens and compare many, these types of, and some DeFi protocols these days too, right? We can talk about, but in terms of the fees and stuff they're generating. But if you think about what fees are to a crypto network, if you start burning fees, that's a reduction in the token supply, right? And if you think about a company economics, right, people would say, how is that revenue? If you think about what happens, I give dollars to a company like Salesforce, and it goes through the P&L, they have profit from that, and they can buy back their shares, right? If you burn tokens, that's the same thing, right? So that's the reason you can think about, you can be comparative to a degree with crypto network economics and traditional company economics, because I do think like crypto is kind of like Ethereum is really a 2.0 cloud stock, is the case I've made before. And, that's the reason we kind of frame it in that sense.
Yeah, so let's talk about that framing or that comparison. I got to admit, sometimes when I hear the kind of the cloud stock metaphor, I get a bit of PTSD from this whole idea that people thought in 2017 that Ethereum was like a decentralized AWS, right? That it was like the internet computer, and that like we were going to store everything in this internet computer, like graphics and everything. And the reality is it's an internet computer. It's a world computer in terms of its permissionlessness and in terms of its kind of its span, but it only has the power of like your computer, your consumer grade laptop, right? So this is not going to store all of the world's images. It's not going to be a world computer if you're looking for the second coming of AWS. But I think I start to understand you as you describe it as a kind of a country in the cloud, right? Because it is a property management system in the cloud. It's like a country in the cloud. And it does have this capital asset element, whereas David has described it before too. With EIP 1559, it's doing essentially a share buyback, and it's taking those shares and it's burning them. It's removing that scarcity. But I want to get into that detail here. If you compare the kind of rate of growth that we're seeing, which is right now 1,400% year over year growth in terms of the top level revenue Ethereum is generating. You compare that to other cloud stocks, let's say, these are fast moving, tech companies that are growing fairly fast. You get like Salesforce, which is 195 billion market cap, and it's on a revenue of 21 billion, and it's only growing at 25% year over year growth, right? Is this kind of the comparison that you're making? And what are the metrics that fall out of this? Does this indicate that Ether, the asset, just from a top line revenue perspective, is undervalued, overvalued, fairly valued relative to these sorts of cloud stocks?
Yeah, I mean, I think, I think that, there's a kind of a lot to unpack in here, right? Like, I think the cloud is kind of an arbitrary thing, right? Cloud is also a lot of computers that are traditionally on, one layer, right? And like, people just took it somewhere, right? But I think the narrative of framing Ether and crypto as kind of a cloud, a new wave of the internet, I think that resonates for our clients, because if you think about the narratives of things, right, back to narratives for investing in crypto, for a while, crypto and cloud, investing in the cloud wasn't cool. And then eventually it became the thing, right? And everyone was like, I'm moving to the cloud. And where's the cloud? Really, it was just in data centers, but they weren't in your place, right? And where's the data stores? So it's kind of the same thing here, right? And I think about so we are saying like it's a next wave of the internet, right? So it's the next layer of internet applications by adding the trust layer on top, right? Even if you are storing it wherever you're storing it, right? So, and if you think about the growth layer that these things enabled, right? It's been very rapid growth of the cloud. It's made a lot of money for a lot of investors. But for them, if you're growing 25, 50% a year, that's fast, very fast. And that's why you deserve a very high growth multiple, and people are willing to pay up for that. If we look at crypto and we look at just Ethereum, that 1,400% is like eye popping, right? But you could say it's an anomaly, right? Because but it's been volatile, but really it's been growing that fast since 2015. So if you take what's called a compound annual growth rate, it's been up and down. There's been much better years and much worse years, but on average since 2015, Ethereum fee revenue has been growing that fast, 15,000 or 1,500%, right? So I think that's important for folks to see, like the sustainable trajectory of what's been happening with the trend of this crypto. I will still call it kind of crypto cloud platforms, right? In a way, right? For our audience and the people who think about it that way, because this new wave of the internet, just like we went from centralized, traditional, PC, other forms, then went to the cloud, right? I think this new wave is really kind of taking over of crypto computing, right? And so if we think about if you're going to invest in the next wave of computing and the next wave of internet cloud tech, right? I think that this is probably a good place to be from an industry standpoint, right? So I mean, there's big growth multiples being paid for things like the traditional cloud 1.0 companies, and that's fast growth. And Ethereum and crypto networks are growing much faster. The economics aren't exactly the same, so we'll see how it shakes out. But I think that there's something to be said about the potential here, certainly.
David, how is that message landing with Wall Street when you talk about it as kind of ETH as a capital asset, as this being similar to a cloud? How close is Wall Street to understanding this? Maybe in like Bitcoin terms, right? So are we at like their 2016 level of understanding for ETH, and then how do we continue to bridge that gap?
Well, I think there's, again, when I speak about Wall Street, it's really, I'm speaking, there's very broad terms, right? Because there's a lot of really sophisticated people on Wall Street who know a lot, and there's some people who kind of know very little, some people who haven't, spent the time at all, right? But I think the people who, there's a segment of people, right, who have, really just looked at Bitcoin. They haven't gotten to Ethereum to understand the nuances of how this works. But I think that the folks that I've been talking to that are listening and getting to know Ethereum, I think that the model resonates with them a lot, because when they view it through that lens of kind of the potential for economics to be kind of more similar to something that's within their bucket and their paradigm and for framing, I think that resonates. And especially, I mean, the usage and the traction of the fees, I mean, that says a lot itself too, right? And this is back to your DeFi thing, right? With everyone building there, right? So it's an indicator, just like financial statements are, right?
So, David, there's a conversation that we have on Bankless that we think will permeate out into the rest of the world. So I want to get your opinion on it. And this comes in stark contrast to the very, very low rates that bonds are returning for the investors. Like bond yields are at all-time lows. And famously, Ray Dalio just put out a piece where he's saying, well, at these price levels, bonds to me just make they're overbought, and they're just not. It doesn't make any sense to him. And it's something that me and Ryan have been trying to pioneer on the Bankless podcast, Bankless ecosystem, is that Ether is like exactly what you are saying with like this internet cloud platform. Ether offers this internet bond, this internet native bond. Does that narrative or mental model fit into what you were talking about with your clients and investors at Fundstrat?
I think closely, but I would make a nuance to it, right? And it's I'm kind of agreeing and kind of making a slight nuance. If you think about a company's capital stack, right, you can have a lot of different types of assets, from fixed debt to like preferred shares that can do things like pick and accrue interest, right? So and so you can have like convertible preferred debt, and you can have traditional equity. For me, the closest analogy to like staking Ether is kind of like owning like a preferred convertible preferred shares, because you have, I think Ether itself, because of the way that the economics we believe will flow right in the future, once kind of these upgrades, if they come through as we think they will, right, you can have revenue come in, you can have some portion of that be a net reduction to the supply. All right, and the way I think about crypto company network, right, I think about companies, platforms, networks, right? Crypto company network, right? As this evolution is the P&Ls, wherever the revenue exceeds the inflation rate, you have a profit, and that profit is your net reduction in supply, right? That's your net hard money, right? In a sense, or it's just share buyback or dividend, or you can do the same thing with staking, right? And that's like traditional company economics. That's like kind of owning a cloud network equity, like a crypto equity, right, in a way. But if you're staking it, you kind of got a little dividend, and it's kind of like being an employee in a way, right? You're providing compute to the network, and you're getting paid this salary, and that's like your expense on that side to the network. So that's kind of how I would kind of bridge the gap to thinking about personally those things.
Yeah, that makes sense. I love these conversations because it's very clear. All of us are trying to understand these new assets and like fit some existing paradigms into them to help the world really understand it. And there are different ways to do that for sure. But I think you've hit on something in identifying Ether as a productive capital asset that's very much tied to the growth of the Ethereum economy and block space revenue, which is really cool. And again, this is one of the first times I've seen like Wall Street education making that case. And I think you said it well, David, you're able to make that case now because it's true, because EIP 1559 is coming down the pike because we have proof of stake, because those returns are going to come back to ETH holders. Let's conclude with this. And this has been a fantastic conversation, David. We've really enjoyed your time and definitely learned a lot here. Let's conclude with this. What is something, because our audience is mainly crypto natives, what is something that crypto natives should know about Wall Street and people in traditional finance and what they're doing in crypto? What's something that crypto natives should learn and should know about Wall Street?
I think there's a lot of people on Wall Street who personally, maybe they're not the guys who are actually able to make the changes to the investment mandates and to the investment business, but personally kind of probably interested in crypto themselves. Personally, who will read our research and maybe they'll have their PAs and they're interested in it. I think that's so. I mean, I think a lot of people on your podcast maybe are people on Wall Street who are smart people, and they could be crossing the chasm, right? Because I look at you guys. I think you guys have a great show. I think you appeal to a great audience, both crypto and traditional folks. So, I maybe that answers the question.
I think it does. It echoes something we talk about a lot, which is the base layer of all of this is people. And of course, what is Wall Street composed of? It's people. People understanding the narrative. The most bullish thing for Ether, for crypto, is to be understood. David, thank you so much for helping the world understand a little slice of crypto here.
Thanks a lot for having me.
Guys, risks and disclaimers, of course, none of this was financial advice. Bitcoin is risky. ETH is risky. So is DeFi. You could lose what you put in, but we are headed west. This is the frontier. It's not for everyone, but we're glad you're with us on the Bankless journey. Thanks a lot.
To Bankless HQ right now to develop your crypto investing skills and learn how to free yourself from banks and gain your financial independence. We recommend joining our daily newsletter, podcast, and community as a Bankless Premium subscriber to get the most out of your Bankless experience. You'll get access to our market analysis, our alpha leaks, and exclusive content, and even the Bankless token for airdrops, raffles, and unlocks. If you're interested in crypto, the Bankless community is where you want to be. Click the link in the description to become a Bankless Premium subscriber today. Also, don't forget to subscribe to the channel for in-depth interviews with industry leaders, Ask Me Anythings, and weekly roll-ups where we summarize the week in crypto and other fantastic content. Thanks everyone for watching and being on the journey as we build out the Bankless Nation.